Are. Good morning, good afternoon, and good evening. This is Doug Brunke in Scottsdale, Arizona, speaking to you about a really interesting and different topic. We've never covered this before, and we're going to learn all about SME InsureTech today. We're going to talk to experts, the world-renowned experts at MecariRisk and Llewellyn Consulting regarding new solutions for emerging challenges. We are really pleased to have such strong experts in this area. They're going to walk us through from their parts of the world. Our first speaker is calling in from the UK, Alan Wilkins. He's the CEO of MecariRisk Tech. Alan, could you kick us off and give us some background, and then begin to build the foundation for our discussion today?
Yes, good morning and good afternoon wherever you are in the world. So MecariRisk Tech was formed about a year ago following discussions with my co-founder, Doyle Oakey, who's driving the presentation today. And we felt that there was a need for innovative technology to help SMEs secure risk management programs around the world. The reason behind that sort of thought process is that, in developed countries, we have quite sophisticated distribution mechanisms, brokers, direct insurers, etc. And the business community is reasonably well served by the insurance sector. But if we go east and south, of course, into more developing countries, businesses, particularly micro and small businesses, are particularly challenged in procuring risk mitigation mechanisms such as insurance. But one thing they do have is a lot of mobile phones. So they are an enabled community. They are well connected into the internet. The insurance industry is also challenged in as much that it has very high costs of distribution. And when you're distributing to micro and small businesses, the premium are generally small and the costs are great. So this really does detract from the micro and SME marketplace for insurers, where they tend to sort of focus on big corporate programs and developed countries, and particularly in US property, real estate, that sort of thing. So we have a whole underclass of businesses out there that are starved of risk mitigation services. So that's the precept behind MecariRisk. It's effectively, in a nutshell, to distribute in developing countries using digital and mobile technology. There's an enormous amount of sophistication under that, but that would be a simplistic way of describing us. If I just hand over to Doyle now, and we can sort of get on with the meat of the presentation today.
Perfect. Thank you very much, Alan. And actually what I'm going to do is just hand it over to Russell, and Russell's going to give us a brief introduction of some of the issues and challenges we're trying to address with MecariRisk Tech on a global economic level. So go ahead, Russell. Thank you.
Thank you, Doyle. Hello, everybody, wherever you may be. It's a great pleasure to be on. As Doyle has suggested, I'm going to try and give you a little bit of bigger picture context for this whole issue of the micro and small to medium-sized enterprise company sector. I want to start just by giving you some impression of how important these companies are in the great scheme of things. And they really are important, there's no doubt about that. The map, which is presented on this slide, gives you some notion of the geographical distribution of those countries, of those companies around the world. But if we bring all those numbers together, you can see that there's about 125 million formal MSMEs in the world today. That is equivalent to about 95% of all firms in the global economy, and they are responsible for between 60 and 70% of global employment. Forgive me. About 90 million of those companies are to be found in the emerging markets. And in those emerging markets, they account for some 60% of employment and as much as 40% of the GDP in those countries. So they are extremely important, even if we just focus on the formal sector. But if we include the informal sector as well, and what I mean by that is companies that aren't really part of the system of taxation, aren't really part of or closely monitored by government. If we include the informal sector, well then the number of micro and small to medium-sized enterprises swells by another 285 to 345 million. And I would also stress that often many of the newest and most dynamic of these firms really are at the cutting edge in terms of product and technology and so on. Those informal companies can often be where the new ideas begin to bear fruit, where they begin to be brought to the market. So this sector of the global economy is hugely important to global activity. It's hugely important to innovation and job creation. But this sector of companies often has a problem. And that problem is that they don't have the sort of access to basic business services which they would like and which they warrant. And by that, I would include insurance and credit. And of course, when big disruptions occur, such as climate change related events, it is this sector which is hit disproportionately because they don't have that supportive financial architecture to fall back on. If I can just ask Doyle to move forward to the next slide, we can dig a little bit deeper into this issue of underdeveloped financial systems. Now, this map that I presented here is rather entertaining. What it's actually done is just reorganize the globe and really to change the relative size of economies depending on the size of their financial sectors. And what you can draw from this immediately is the sense that the United States, the United Kingdom, and Japan, for example, have extremely large financial sectors. And if you translated that into the size of their countries or their economies, they'd be much, much larger than they are in the real world. And equally, if you looked at, say, Africa or South America, because their financial systems are less developed, they would occupy a much smaller percentage of the globe. So it's just an interesting way of presenting the lack of development that we see in the financial systems in those emerging markets. I'll just give you a little bit more detail on that. Emerging market financial systems often have limited alternative options to the banking sector. I'm very minded, there was a very interesting statement made by Alan Greenspan when he was chairman of the Federal Reserve some 20 odd years ago, where he said it's really important that financial systems have what he described as a spare tire. That's to say that the financial intermediation process didn't just depend on the banks, that there were non-banks, alternative institutions that could provide finance to the corporate sector in addition to the banking sector. Unfortunately, in Greenspan's case, I think it's fair to say that he managed to preside over the excessive inflation of that non-bank system, and ultimately it burst and we ended up in trouble. But the point nevertheless stands firm. It is much better from the point of view of the allocation of capital, from the provision of capital, that we aren't over-reliant on just the banks, that there are alternative sources available. The banking sectors within these emerging markets also tend to be pretty unsophisticated. They provide a limited number of services. They're very conservative in the way they approach their businesses. And again, that can be something that can dry up the amount of finance which is available for these micro and small and medium-sized companies. Also, emerging markets tend to lack for data. They tend to suffer from other shortcomings, limited transparency. We're not really sure what some of these financial entities get up to, what some of these banks are doing. Poor oversight, inadequate governance. I mean, these are all issues which aren't just confined to banking systems in emerging markets. They really apply to the whole economy. But nevertheless, they are very important, and they are considerations that make it harder for the micro and small and medium-sized company sector to get the sort of service, to get the sort of finance that they would desire. And there is another consideration which often is very, very obvious in these parts of the world, and that is that they will have a state sector or a state-owned sector which takes a very large proportion of that financial sector, or is responsible for a large proportion of that financial sector. And often the state sector can be rather uncompetitive, it can impede competition generally, it can malignly distort the allocation of capital. That's to say that it might provide money to companies which really don't deserve it. It might provide money to investment projects that really don't deserve it. And you end up with an allocation of funds which really is pretty suboptimal. And the really important firms, the ones which are really dynamic and really offering opportunities to the future, may not get the sort of supply of funding which they deserve, which they warrant, and which would have so many positive effects on the global economy. Well, let's move forward one more slide, if we may, Doyle. What I really want to talk about now is just to give you some idea of the importance of those emerging markets to global economic growth. And believe me, they are very important. What we've shown in this slide is an estimate of world potential output growth. So let's call it the cruising speed of the world economy. And that is depicted by the black line on this chart. And then we break it down. So we give you some idea of which parts of the world are responsible for most of that potential output growth. And what you can see here is that the OECD economies, or the advanced economies, are responsible currently for a relatively small proportion of that output growth. And it is the developing economies, the emerging economies, which are doing most of the heavy lifting. Now, what is going to occur over the course of the next 40 or 50 years is that the underlying growth rate will decline, and in particular, the driving force behind that is probably going to be slower growth in China. But what you're also going to see is that the role of those emerging markets is still going to remain very important. They're still going to dominate world potential growth over the course of this next 40 or 50 year period. Noteworthy that the Indian economy will play, we believe, a very important part of that process. Even as the Chinese economy exerts less of an impact, the Indian economy will exert more of an impact. And other economies will continue in the emerging markets to be providing an important role in driving the world economy over that period. But it's fair to say that these estimates which have been put together and presented here may be considered to be something of an understatement. They may be pretty conservative. And there may be a sense that the full potential that the small, micro, medium-sized company sector can contribute is being a little bit understated. And the most obvious reason why that might be the case is that those micro, small and medium-sized companies are currently not getting the financial sector support that they could really do with, not getting the sort of financing which could allow them to grow faster and in turn allow all the regions of the world, but in particular the emerging market economies, to grow faster than they're currently doing. So, you know, the basic equation is if we can get more and better finance to the MSME sector, they can do more and better investment, they can have more security to their businesses, they can have a greater ability to absorb any bad, nasty shocks that come along, they can be more productive and efficient, they can generate higher incomes, and therefore growth potential for those emerging economies and for the world as a whole will be commensurately higher. So getting finance right in the emerging markets, I cannot emphasize this enough, could be something pretty transformative, not just to those economies themselves, but to the global economy as a whole. So let's flick forward to the next slide, which focuses more on the issue of technology and how technology can transform emerging market financial sectors, how technology can help those financial sectors to overcome the constraints that they're currently operating under and can overcome those constraints on the emerging market corporate sector, and in particular, those micro, small and medium-sized entities. Because technology is a disruptor, but by disrupting, it can generate some very positive effects. And technological innovation within this context can have huge implications going forward for payment systems within the financial sector, for lending behavior, for capital raising, for insurance, market provisioning, and for investment management. Technology has the potential to have a transformative effect right across the board for financial sectors, and therefore right across the board for the corporate sector. And the real innovators, what they will offer is a number of positive considerations. First of all, they will help to develop highly focused products and services, thereby helping those companies to target areas of customer frustration. The real innovators will be able to automate and commoditize processes and so be able to service new customer groups. The real innovators will be able to use data more strategically, for example, by tapping into social media accounts. The real innovators will be platform-based and will be capital light. You can think about them as being variations on the sort of theme which has been established by companies like Uber or Airbnb. The real innovators will disrupt, but they won't consume or devour. They won't be destructive, if you like. The disruption will be positive, and they will collaborate with entities existent in the old economy. So technology can have a hugely positive effect on financial sectors, allowing those financial sectors to deliver the sort of product that this smaller company sector is desperately in need of. So let me just try and sum things up for you where the economics of all this is concerned, or at least the macroeconomics is concerned. These smaller companies are hugely important on every level. They're dynamic, they're responsible for a lot of the growth that we are experiencing currently and which we hope to experience in future. And they're especially important in emerging markets. And the EMs will continue to be a powerful force in driving the global economy as we look ahead. These companies could do so much more if they got a more sympathetic and a more supportive financial sector behind them. And the way to achieve that, or one important way to achieve that, is going to be through technological advancement and technological improvement going forward. And if we get that right, if we get that technology right, if we get this small and medium-sized company sector really operating to its full potential, well then it's not just those economies, those emerging market economies that will benefit, we're all going to benefit. Doyle, over to you.
Excellent work, Russell. Thanks for teeing that up for us. And I'm going to pass it over to Alan. This is really giving consideration to the response that MecariRisk Tech has. Alan, you're on mute, by the way. The response from MecariRisk Tech to assure that we can fulfill the needs of the global SME, that entire market, through the technological and innovative offering with principally risk management. So go ahead and take it from here, Alan.
Sure. Okay. Thanks very much, Russell, for your great introduction to the world of macroeconomics and how that drills down into the micro and small businesses and how they can benefit, through innovative products. The points you make are absolutely fundamental to our philosophy for this project. Before I go through this slide, 300 years ago, some gentlemen in Lloyd's of London decided to, in a coffee house, to pool their risk. They were seafarers and they wanted to trade around the world. And they realized that the chances of not getting to where they wanted to be were quite high and they would bear financial losses as a result. So they started to pool their risk. By that way, they could then invest in trade, invest in having an adventure, as they would call it. Turn the clock forward, that's spurned an industry that is now valued at about $3.6 trillion, made up of life, health, disability, and general insurance. So the concept of pooling risk and a pool of many people bearing the risks and losses of few, go back centuries. It's helped the Western economies develop. So we saw the over-bloated countries on the map, and my own country, the UK, a very tiny little island in the middle of the Atlantic Ocean, well, not to the right of the Atlantic Ocean and to the north of the continent of Europe. And yet on that map, it's overblown because we've got a very strong financial services sector, both in banking and insurance. Then we saw to the left of that, the United States, again, overblown compared to Latin America. With that general insurance pot, I think said in the introduction, of the 1.2 trillion of general insurance, 30% of that is US property and just property investors, real estate, etc. So the insurance industry is actually shying away from trade. It's going away from its roots, from where it started, and capacity is being pushed into more certain risk in developed countries that it can be aligned to a zip code or a postcode, and that's starving the flow of capacity of capital into the trade arena. Why is that? Because banks will not lend money if they think it's too risky, and the way to de-risk that is to take out insurance. But if you've got an insurance market that's not interested in insuring trade, then you have a bit of a problem, a bit of disconnect, of polarization, and that's what we're seeing in the world today. So the precept is to actually start to get supply chains more transparent. We need to start to drill down and have a look at the risk in supply chains, because at the moment it's a big black hole. Goods get produced, they get put in a container, they go through, and there's some sort of journey that nobody knows about, involving a sea leg, a land leg, maybe in the air or on the road somewhere. And nobody knows really where that cargo is and what the stresses and risks it's being subject to. All insurers can do is guess, and they don't like guessing, they like certainty. And that's the reason why they don't capitalize on this. But also from a business perspective, why don't they want to underwrite trade risk? They don't know about these businesses. We have millions of informal businesses that even governments don't know about out there, just trading away, just trading locally, typically within a 10-mile radius or less. But with insurance, and if we can get insurance into those businesses, we can get the capacity in. But how do we do it? We need to create a digital identity somehow. And this is where technology can come in, not to disrupt an industry, because we're not looking to disrupt the insurance sector. What we're looking to do is grow it. If you look at this, the global GDP, it's anywhere between 80 to 100 trillion, depending on which report and which research body is undertaking that research. And yet the insurance sector is generating premiums of 3.6 trillion. So a lot of trade is not insured. A lot of trade is not underwritten. You can only imagine what the global economy could be if we can get that right, open up transparency, and get the data out there to insurers to underwrite trade risk. It'll then stimulate the flow of capital into trade and particularly developing countries. So with that, that's sort of a bit of a lead into this sort of this diagram that you see before you now. And this is all about the value chain. And it's very simplistic, but it's got 4 levels in the value chain. We start off with raw materials. We start off with the seed. We start off, with the produce that is created from those seeds, or we start off with a iron ore, or we start off with oil. At some stage of the game, somebody's going to take that raw material and they're going to process it and turn it into maybe a sub-assembly or some products that can be used and turned into something else. So every time those goods are moved or processed, they attract additional value. So the additional value is obviously the expectation of profitability that person wants to put on that product, but also a large section of that is the actual distribution costs. So actually physically moving the goods from A to B, and that can be upwards of 15%. Some developing countries up to 40% of the actual product is of price that people pay for it is just taken up in moving those goods from A to B. So we get an increased value as we go up through the value chain. We go into our wholesale distribution arena, and then finally into retail products. This illustrates that insurance is needed all the way through. But what we're actually getting at the moment is the insurance is on the right-hand side of the diagram. It's when it hits the wholesaler or distributor in the developed countries or the retailer in the developed countries, that's when the insurance kicks in. What we need to do is get the insurance right back at the raw material level, and then track those goods through the supply chain and ensure that insurance is attaching all the way through, and we follow the goods through. So really that's how we add value to the insurance industry. That's how we add value to the raw material producers, through to process manufacturers, through to wholesalers and distributors, through to the final end retailer. We liken it to, in a farming sense, it would be from seed to table. So that would be summing up our value proposition. And then with that, once you have these value chain actors involved in the insurance chain, we're obviously creating digital identities for these guys. And Dawn will go on later on in the presentation to show how that will be done. But once we've got that information, then we've got them on the hook. We've got details about that particular individual. As they start to generate more and more value for themselves, they'll start to think about life protection, disability, health insurance, how do they protect their families, etc. So it's not just about general insurance and insuring crops or seed. It's all about expanding that product offering as well. And then that creates extra value for the insurer, makes it more attractive to the insurer to actually enter new markets. And the conduit simply is the digitization of that process through the MecariRisk app for micro and small businesses. So that's me done, Doyle, if you'd like to go to
Excellent. Thanks, Alan. I think that gives you a summary, a very positive summary of the full value chain within the micro. And this is not just micro SME. In fact, in East Asia, ASEAN, we're now dealing with a number of true SMEs and some even larger. Nevertheless, I want to walk you through that process by which we can insure most everything utilizing this platform. Likewise, we know this is the platform, the target platform for the SME and micro SME, simply due to the fact that most of them, roughly 90% in some of the least wealthy countries in the world, i.e. Bangladesh, which has been our target market now for 3 years, have a 90% penetration rate. I spoke last week also to a provider to Grameenphone. Grameenphone is the largest cell phone provider in Bangladesh. They actually estimate that among farm groups, there is an 80%, among farmers, 80% penetration rate of smartphones and mobile devices. So we know we're on the right track. I'm going to walk you through the digital process for our SME mobile application, assuming that this is a farm offering or crop or property offering. This is work similarly for generally any product, but you're beginning here on the right side with the micro SME mobile application. Excuse me. They'll turn on the application, provide appropriate authorizations to utilize photography, video, files, and sound on the application. And that application is going to walk them through the process of collecting farm level or property level data through photography. Then they can populate their profile either using voice recognition or also something as simple as Google autofill. That data is captured in a global cloud-based database, aggregated and stored. Some of you on the phone will recognize that this storage system is nothing more than a policy admin system. We then run it through our proprietary and partner auto underwriting system, which is an artificial neural network and AI tool that we are building in cooperation with. We've had minor funding from the Mershon Center from the Ohio State University, which I'll mention momentarily. We then, after running it through the auto underwriting, if it's an indexed or parametric product, we can simply collect the premium, or if it's a claims-based product, we can also collect that premium through a Venmo type peer-to-peer payment system, of which, say, in ASEAN and particularly, again, Bangladesh, there are literally dozens of these types of offerings, and we have a number of partners that we're working with in the market today. So in effect, using the mobile device, the user circumnavigates the property, capturing GPS coordinates for a full photogrammetric model. And we auto-load that data. We're confident that most of the details can be captured in 30 minutes or less. And using the simple voice interface, we avoid any problems associated with illiteracy or lack of knowledge with respect to the system. Premiums are collected through a true peer-to-peer device through Venmo type functionality. I'm going to pause right here, and I actually want to show you or walk you through the system. And this is the design, and we're moving toward implementing this with our business partner in, I can't tell you specifically where, but we have a business partner that is, we're near investment with them, and we believe that we're going to have this launched within the next 2 to 3 months. So MecariRisk, you enter the application. We can provide crop insurance. A simple modification makes this property insurance as well. We can provide a fast quote just by walking around and snapping some photos of either the crop or the property. Let's do the quote. We'll simply log in or get a quick quote. Here's the permissions. We grant those permissions in terms of the GPS location, camera, and storage. We'll allow that, and then we begin to walk around the property. After walking a few steps, the system is going to prompt you around the boundaries of the property so that you can snap a photo. Pause and take a photo here. So we'll click on the photo, and of course this is mocked up. Take a photo of the rice paddy. Our focal point within the Southeast Asian markets are paddy, potatoes, and prawn. Prawn meaning shrimp. This is an important cash product to most of Southeast Asia. We snap that photo. It's going to have you pause and start walking again. You circumnavigate the entire property, again, taking between 8 to 12 photos. Those photos are uploaded to the cloud. And with the photogrammetric model and with the remote sensing research we've done with Dr. C.K. Shum of the Bird Polar Center of the Ohio State University, we've created a digital model starting in Bangladesh to create the underwriting process. This underwriting can be done instantaneously, literally with the AI and ANN engine. Simply accept the offer. This would auto-populate, submit, and then pay the premium, as I noted, through Venmo or Google Pay. We also have the option within the context of the entire MecariRisk ecosystem to provide this through our own payment gateway. Now I'm going to shift back. These are older designs of our initial mobile functionality. The AI system is ready to use and actually functional in insurance entities and the agricultural industry in both Malaysia and Singapore. and expanding broadly throughout Southeast Asia. Then our cloud configuration, I'm going to show you this momentarily. This is referred to more commonly as a policy administration system in the insurance industry, and that system has full capabilities for both life and non-life functionality. And to just give you a quick view of that tool as well, we do have product, issue, agent, contracting, all of the standard functionality that you would anticipate having within a fully loaded or fully baked policy administration system functioning in the cloud as a platform as a service or a true multi-tenant platform in particular environments as possible. We started this journey a long time ago, you guys, and as a group, I started this journey jointly some time ago in 2016 with the Ohio State University, teaming up with my former advisor, Dr. Craig Jenkins, and as I noted previously, Dr. C.K. Shum. Dr. Shum is a cooperative partner with the Nobel Prize winning effort from former Vice President Al Gore. Dr. Shum's remote sensing models actually that were supported at this time by the IGFA Belmont Forum planted the seed for us to begin this micro SME process. That research was then later funded. We received funding from the NSF to investigate the commercial opportunity for this particular offering in crop and SME. What we found was that high-income countries really had no need for this particular opportunity, largely due to the fact of government intervention, and that our better market for this particular risk management tool was in mid to low income countries. By 2018, we had been given a small grant through the Mershon Center, which is also associated with the Ohio State University, and we were able to validate the need in multiple markets, including specifically Bangladesh. That need is via government, which I'll reach into or address under select prospects, NGOs and entities, for example, like Shadaron Bima Corporation and Ekti Bari Ekti Kamar, both government entities in Bangladesh, but also very interestingly, the International Rice Research Institute represents an 18-country opportunity for us to provide SME insurance across that value chain that we described previously, from seed to sale or farm to table, however you want to look at it. We're a small business. We've been cooperating with Dhaka University's Institute of Disaster Management and Vulnerability Studies during this entire period, and the Nafer Maru Foundation, which is a small NGO with global reach. Most recently, we've been working very closely with the Archipelago Group, which is a strong and growing reinsurance provider and insurance provider in East Asia. Some of our other prospects, this is very recent, in the Jordanian Ministry of Health, with whom we have an offering ongoing in the Jordan River Valley, given catastrophic flooding in the Jordan River Valley recently, and the Ministerio de Agricultura, Ganadería y Alimentación de Guatemala, of Guatemala, through that day in there. This spells to be a global opportunity, both from a B to G or business to government basis, but also a B2B private offering. I can't mention our private offering partners, of course, and companies that we just received another one this morning for a proposal that we will be sending in the next 6 weeks. The opportunity is vast and growing. Go ahead, Alan, this is where you pick up again.
Okay, thanks, Doyle. So just a quick recap or a summary of where we are and the journey we've been on. So Doyle's talked about the history, if you like, of where this has all come from. It's all about really getting great data from areas where there is currently a shadow or a black hole of data, turning that data into a model that can be used to auto underwrite. So the world of crop, can be transformed, or crop insurance can be transformed using low latency satellite data, and couple that with artificial intelligence underwriting engines, and distribute via a mobile platform. This is what we're all about. So those sort of 3 steps there, that's basically just summarize those 3. So we're on quite an accelerated journey now. We have the customer journey, and now we're busy working the system to customize and integrate to the various opportunities we have in our supply chain, if you like, of opportunities. And they range from, as Doyle explained, from Jordan through to Asia, through to crop. We've also got cargo insurance opportunities, and these span from west to east. And then there has to be some backing, obviously. There's no point just creating some technology that nobody really wants. People do need this at the ground level, but also the insurance market has to back it. And we're now finding more and more interest in our proposition, not least from the archipelago group that we've described, but also the London markets that realise and recognise that they must rejuvenate and re-energise their business model, and move away from insuring just real estate, but use data in a valuable way to unlock global opportunities for them. So in the UK, we are undergoing an application for a UK license to trade, a financial services license, and that will provide us with a nucleus of a business unit in London, where we can draw in capacity from the London market, and then backed through reinsurance and archipelago, etc., we can start to work and underwrite risk on a global basis and distribute it seamlessly to where it's needed. So that's the progress and what we've achieved so far.
Perfect. Thanks, Alan. And to finalize, we are coming up on time frame. We have truly a cross-disciplinary team with global behavioral science expertise, the geodetic, and that includes even myself, but also Russell, that is an important global advisor, as is the entire Llewellyn Consulting Group. We have the geodetic expertise from Dr. C.K. Shum, and some of you on the phone may like that Dr. Shum is a University of Texas Austin graduate, but now is attending the appropriate university and teaching at the Ohio State University. We have enterprise insurance expertise, not only Alan and I, but individuals that are spread globally and providing that expertise. Technology experience within the entire insurance value chain. In fact, we are an unrivaled team that have experience in micro SME and SMEs globally. Alan and I, in fact, met on a global SME product offering in the GCC and saw eye to eye and drove this forward based upon that camaraderie and that common vision. The micro SME insurance technology ecosystem, the world needs to help to drive, and we'd be delighted to be able to explain more to anyone that is on the phone or within the reach of our voice at this moment. So we've got a great team and a great offer and a true success story and a deep and getting deeper pipeline. So thank you very much, and I hope to field any questions you may have.
That sounds great. Thank you, Doyle. I don't think I completely introduced Doyle. The information will be on the blog post that follows this recording. Doyle Rayoki is the COTO and co-founder of MecariRisk, and our first speaker we mentioned, partner at Llewellyn Consulting, Russell Jones, and now the CEO of MecariRisk. So thank you, gentlemen, for sharing. And you shared the other fellow who it sounds like is part of your team. We do have some questions from the state of Michigan, but we'll ignore those considering that you probably don't want to address the Michigan-Ohio State issue. In terms it sounds like you might want to.
I'm happy to treat any issues they might have.
Very good, I'm sure. So for those of you around the world, Ohio State and Michigan, and my alma mater, Michigan State, they're definitely some rivals. So in terms of questions, please, if you have some questions, type them into the chat box, and we'll address them either here in the next 15 minutes, or if we miss your question, either hang on and we'll address it in the blog post, or send an email to info@globalchamber.org, and we'll be happy to address that. One of the questions that's come in is relative to the market and how you see the next X number of years, whether it's 2025, 2030, 2030 or 50, however you want to kind of wrap our brains around your vision of where is this taking us, and if you could address that from a MecariRisk tech standpoint, and then how does MecariRisk fit in with other global systems, other global companies that are addressing this tremendously large need. And I don't know who would address that question, but either Doyle or Alan or
Alan, you want to start off and I can backfill, or vice versa? It's up to you, my friend.
Yeah, sure. Okay, so if I just recap on where we are with the insurance sector again, so it's a $3.7 trillion industry with about a 1.2 on the general insurance skewed towards developing countries. So we know the size of the prize is larger than it currently is. The global economy is growing, certain areas 8-9%, some areas 1% if we're lucky, but as an average it's around about 4 to 5% per annum anyway. So it will naturally tick up. So the need for risk mitigation services, insurance, and risk management will increase, but the reality is that the distribution is the thing that limits, or the current distribution model is the thing that limits the supply of insurance. So somehow the insurance industry needs to re-engineer itself, get away from an analog paper-based business that's predicated on employing hundreds of thousands of people to do a job that a machine can do. Somehow it needs to get away from the being wedded to old style mainframe systems with multiple interfaces. Somehow it needs to be more customer centric rather than pumping out just products that it wants to sell. It needs to actually readdress and re-engineer itself so that it can actually appraise what customers need and then work backwards from that proposition. Like most businesses in the service sector need to do to survive, the insurance industry is quite laggard and has been quite obstinate and quite laggard in its approach, and it just continually pumps out product that its systems currently can handle. We need to get away from that old-fashioned model. We need to work out what do people at the ground level need, and then also how do they distribute it. So with cloud-based computing, the advent of cloud-based computing, that allows us to free up and get away from mainframe or the legacy systems. With the modern software, with the modular-based sort of software computing and coding, we can now create things from scratch, based on a client need rather than a systems process approach. So we are not the only company, looking at this area. There are InsureTech companies springing up all around the world. In fact, there's record investment in InsureTech. But there aren't many that are focusing on the micro and SME businesses, because if you look back to that slide that we sort of finished on, the multidisciplinary and international team, most InsureTech businesses start with a couple of IT guys that have a great idea, and they want to create an insurance digital system, and they'll set off and think, well, you know, I can't insure my bike at the moment, you know, for a day or two, because that's all I need to insure it for. And I've spoken to a broker and nobody wants to insure my bike for a day. So let's build a system. So it's exactly what they'll do. Then they rush headlong into the insurance industry to try and get capacity and underwriting capacity for that. And the insurance industry just doesn't quite understand it, doesn't understand where these guys are coming from, doesn't understand the marketplace. So we're not in that space. Contrast our team with that kind of scenario. We've got insurance people that are really experienced and have been, you know, 20, 30 years experience in the industry. We know how it works. We know how it should work. We've got the technology experts in place to guide us, and we've got global experts like Russell guiding us on, you know, where we should be aiming and focusing. So we're in a different space to that, and we can now drive our marketplace forward through innovation. So I don't see that there is competition, but I don't see it as great competition. And even if there is, bring it on, because there's a massive potential upside for the insurance sector. You know, we're not trying to compete against what's there now. We're trying to create new economic activity that will need insurance. So does that kind of answer the question, really? We're in a bit of a niche sector, but we're in an important sector. We've got, you know, a very strong and deep proposition, and we've got the whole sort of the global economy to play for, rather than trying to upset and disrupt existing markets.
Okay, so just maybe, I think what was being asked was more, in 2030, how much new revenue will be created by this opportunity, and what percentage of that would be MecariRisk? So just kind of ballpark number. So if here we are, whatever, 11 years from now, you know, is it another $1 billion of business, and you have 10% or you have 50%? Can you give us kind of that rough idea?
I can help with that as well, Alan, if you want me to.
Please do.
Yeah, most estimates just for microinsurance are estimated about $10 billion of annual premiums, 10 billion with a B. If we were to consider this on an SME level, we can exponentially increase that, especially with UN numbers. We're probably approaching a number closer to 80 billion in terms of premium. We are not an insurer either, Doug, albeit we will BPO or take some portion of our revenue from the insurance premium as earned. And our goal is to be a large player within that space of that 80 billion annually, driving, you know, we'd like to have, of course, 10% of that particular market. And that is the global opportunity we're looking at. From the standpoint of 3 areas of interest, or 3 specific segments of interest, not only in the insurance play, but reinsurance. So insurance and reinsurance is one particular play where we can bring in the reinsurance commission and some portion of, in quotes, a commission from the insurance carrier. Secondly, technology platforms themselves. So we're going to be a technology provider. That is our primary mission, to be providing technology to smaller insurance entities that generally would not have, or otherwise would not have, access to the AI functionality, to the mobile functionality, and to the Saas functionality. Many of these companies, especially in areas like Bangladesh, are entirely backward. I shouldn't say backward, but they're catching up. We want to help them leapfrog into that market. And thirdly, AI, and I'll follow up on that question from Bharat S. with respect to the IoT revolution. The AI and artificial neural network that we have in place with the research of Dr. Shum, as well as projected research that we're going to be launching soon, is critical to being able to provision that to those smaller insurance carriers and entities to be able to compete with the larger global entities. And to give you an example of how important that is, Allianz invested $97 million in Bima, a microinsurance, and this occurred about a year and a half ago, invested $97 million in their Bima's microinsurance. That is roughly the size of the market that we're contemplating.
Gotcha. So we have about at least 5 questions and only 5 minutes,
Yep.
so we end up going a little bit over, but let's see if we can cover as many of these as we possibly can. And like I said, we may possibly go over. Rashidun has asked a question. Rashid. He's asked about one of the reasons that there's low penetration in Bangladesh is that people have a fear that will not get their money back. So they're not used to that whole process. So along with distribution and market-driven product, how do you tackle behavioral change in the world and specifically Bangladesh? And there's also a question relative to Bangladesh of who are you partnering with, and are you partnering with a operator?
Excellent questions. And Doug, do you mind? I've got the list of questions in the webinar because Ryan Savage has asked a technical question as well and a question about IoT. Do you mind if I take those kind of in order?
Well, we would just ask them because we got to finish up. So I'd like to keep pace.
So mobile operations partners, MRM Shorehead, my point here is we do have local partners in Bangladesh. We're also looking for other partners. It's a large market. There are a number of crop insurance and SME insurance openings. You may know about No Good has just recently opened up a financial services arm. A number of insurance companies coming in as players. We are very open to additional partnership, very simply. Coming back to the question from Rashid, very good question. You're experiencing this with me personally. So the reality is the take-up of insurance is a very difficult proposition. That is why we need the NGO. That is why we need entities like Grameenphone, BRAC, MicroInspire, the former MicroInsure partner that we're formulating a relationship with. The point here is we are seeking partnership across any one of these entities. We're willing to implement the technology insofar as we simply have a local license. NGO, seed provisioners, agricultural providers, all of these act as distribution channels and potential points of entry to educate the farmer, to educate individuals about insurance. And in fact, we're talking now to companies that supply garment manufacture, because literally there is no garment manufacturer insurance in Bangladesh, period, and in other textile manufacturing or textile assembly entries or companies. For example, Bangladesh only recently offered a workman's comp policy locally. I've got 3 minutes trying to hit your question, Ryan, which I promised I'd get to. Yes, the solution is proposed. It's primarily integration. So how much of it is developed? 80 to 85%. In order to implement first customer region, you should be familiar with this number, my friend, 60 to 100 days. First implementation. And then depending on product, we can do it in less time. We're pretty confident we can have a simple term life product stood up or the crop insurance product stood up in about 30 days. IoT question from Bharat. IoT revolution will have an effect on micro SME insurance market. And how does that affect? Doug teed us up on this. Part of the mobile interaction for the term life and another product we have in the product roadmap is a simple remittance term. If we have an interaction or API into a Facebook or LinkedIn account, we could utilize that from an IoT perspective for full underwriting in a matter of seconds. It's already being done through our partners and ourselves. So very capable. The IoT revolution just enhances our ability to acquire that data, do the underwriting rating, and sell a policy much more quickly. And Raihan, Raihan asked a question, how are you approaching current remittance policies of Bangladesh, which are not yet so tech friendly? From a remittance standpoint, regrettably, and to Russell's earlier point, Russell indicated there's too much government intervention. Raihan, that's exactly what is happening in Bangladesh. Recently, the Prime Minister's office indicated it would take over a $16 billion insurance industry. That's $16 billion annually in remittances sent to Bangladesh, the bulk of which are coming from the GCC states. If we were able to use that premium for private use, so take 1% of that 16 billion and put it into the private economy, GDP growth will skyrocket. The problem is the government wants that money. We have a solution to address that remittance, the policy remittance issue, and the remittance of funds into Bangladesh very quickly. I just hit 10 a.m. Doug, I'm not going over.
And I think you got all the questions there. I think there's some other nuances in the questions that we'll follow up with. But I want to thank all of you, Alan, Doyle, and Russell. Great presentation, amazing opportunity. There's a lot of technology changes. There's a huge opportunity. There's a lot of embedded habits and in people's heads and in people's lives in these countries, and there's a lot to overcome, but it sounds like you've given a lot of thought. You've got a great technology product, and so let us know if someone's interested in get a hold of you, let us know how that can happen. Certainly info@globalchamber.org can get to you. How would you like people to communicate to you directly?
I'm responding right now to a number of questions actually asking for the information. So I'm sending out my contact information and Alan's with respect to follow up and any questions they may have. I'm giving our MecariRisk Tech email addresses. And then of course on our webpage, MecariRiskTech.com, you can also contact us here and just send a simple message and then we can follow up from there.
So for those of you watching on video, it's Doyle at MecariRisk.tech and Alan at MecariRisk.tech. And Russell at Llewellyn Consulting, thank you especially for creating the foundation for the discussion around the macroeconomic drivers that are out there today. And so, gentlemen, great job, great opportunity, and we really appreciate you sharing today.
Thank you very much. Thanks for the opportunity, Doug.
Thanks for the
Take care,
opportunity.
everyone.
Thank you very much.
Thank you.
Our next presentation will be a week from today, and it's about selling your business. So these guys are a few years from that, but if you're out there and you've got a business and you're looking to sell it, check in a week from today, -1 hour, and we'll be chatting. Take care. Have a great week, everybody.